gold is continuing its dazzling rally, jumping 700 rupees to touch a new record high of 1.24 lakh rupees per 10 grams. Now, this surge comes as investors seek refuge in the safe haven metal amid growing uncertainty over a prolonged US government shutdown and expectations of further rate cuts by the US Federal Reserve. Now, according to the All India Sarafa Association, gold of 99.9% purity climbed to 1,24,000 rupees per 10 grams, while the 99.5 variety has also hit a lifetime peak of 1,23,400 rupees. To discuss more about this, I'm joined by Navneet Damani, Group Senior VP, Head Commodities Research at MOFSL. Navneet, thank you so much. Good evening and welcome to NDTV Profit. I'm going to jump right into it. We're looking at recent volatility in global markets, geopolitical tensions. How are you seeing the gold prices trending in the short term, and what key factors are likely to drive these movements?
Well, 21 trading days and 24% returns, that is how I describe gold prices. The kind of momentum or kind of ferocity we are seeing in gold prices is something which we've not seen in the last many years. So view-wise, nobody had a doubt that gold prices are not headed higher, but the pace of the rally is what is surprising the market. And what has changed the dynamics of the market is de-dollarization is the biggest theme in the world, or biggest buzzword. That is what is changing the macroeconomic framework. Second is treasury banks are probably exiting from US treasury bonds and parking their way through gold and silver as an asset class, because it's a probable replacement for the US treasury, what they've been holding for the last many days, and they are largely price insensitive as far as probably investing in treasury is concerned. So a shift from US treasury bonds to gold is what we've seen in the last say couple of months, which is driving these prices higher. And the last leg of the rally, I probably feel that a lot of ETF buying or a lot of retail buying, which is kind of pushing up the prices at this point in time, is what is adding to the fire over the last 2-3 trading sessions.
And, you know, with the US Federal Reserve stance on interest rates and inflation concerns that are persisting, how would you advise and what do you think investors should position themselves in gold as a safe haven asset versus other investment options?
Well, a lot of people are living in FOMO at the moment, and they want to jump in the bandwagon because it's no more a safe haven asset at this point in time. It's a return generating asset as we speak. It's giving you about 57% returns on the domestic front, and silver vis-a-vis is giving you roughly about 70% returns in the last 1 year. And that is why people who missed out on this rally want to jump in and kind of want to capitalize on the move in the near term. But US Central Bank has kind of delayed its rate cut process. We've seen just one rate cut in the year 2025, and probably one more could be underway by the end of this month. The December month rate cut is still a question, and I don't see that if inflation starts to jump up from here, which is already started to tick up, if the kind of joblessness number continues to inch higher, and probably the $37 trillion worth or the shutdown which is going through kind of bites the US economy in the short run, I don't see a reason why we will have a rate cut in the month of December. So if that happens, then this rally in gold prices could go for a toss. Already we are seeing the spot and the future prices from a premium of $125 trading at about $20 premium, which is showing signs of exhaustion in this rally. Whereas for silver, the cash market and the futures market is already in an inverted scenario for the last 2-3 days, which is kind of saying that the market is heated at this point in time, and further run-up could be questionable.
Navneet Damani, thank you so much for your time. We'll, of course, continue to keep tracking this. This is, remember, as gold has hit a record high, inching closer. But thanks so much for that.